Okay, testing. Excuse me. Testing 1, 2, 3. Hope you can tell I can have. I'm a bit sick, but I never take days off. I didn't think I'd come out coughing right out of the gate. All right. Anyways, good morning, everybody. Another day to trade Forex. Yeah. So it is. Let me move my coffee mug here. It is May 23rd. That's a Monday. May 23rd. What a lucky day it is. Lucky to be alive, right? So without further ado, let's clean off our workspace and get ready for another trading day. Let's do a bunch of technicals today. Let's go. Keep boosted. Let me turn the lights on. I always forget to do that. I'm all tangled up. There we go. Boop, boop, boop. Me. All right, let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yep. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. We provide these strategy sessions every day, Monday through Thursday here at Forex.Today, and every Friday at FXStreet.com. You're welcome to join us. At FX Street, I am Speaker of the Year, Forex Speaker of the Year. And that's really cool because they have, dozens of Forex speakers, so it was a real honor. So thank you for your loyalty. Yeah, sorry, man. Just we'll see if my voice can get through it. Yeah, sorry. So I looked at the dollar pairs on the open. As you know, it's a Monday, so you set up your weekly trades. And I'm looking at this pound dollar. It's at a psych level. It's at a weekly central. And this was early Asia. We had a nice little 15-minute Stokes, and hoping it would go from weekly central all the way to MR1. Where's my drawing tool? Come on, drawing tool. Wow, my voice is way worse than I thought. Man, we might have to make it a short one. I didn't think it was this bad, but of course I haven't been talking. There we go. But you know how it is, right? My daughter gets something from her schoolmates, brings it home, is sick for like 4 days, and then gives it to my wife. She's sick for 4 days. My turn. Wow. All right, let's see if I can get through this. So anyways, I was thinking this, right? Long sort of in here. And if you're going off the central, then your target's going to be R2. Then you got the MR1, so you might as well throw in the monthly. And started out real nice, right? Got that target. It's on sale. It's real nice. So anyways, that was the kind of the thought, right? Maybe a scoop up into here. Well, I guess that didn't work out, huh? Yeah, well, your dollar looks strong, but I'm talking, it's a tough thing when you live in, let me tell you my sob story. My sob story is I'm sleeping around this area here, right? So what I'm talking about is, what's my thought process here? Okay. And you get this little dipsy do and long and gone. Feeling really nice. Now change this out to like a 4 hour. What did it look like? And, I got this on my mind. Jojo, right? Doesn't look bad, right? There's only one thing going against it, right? And it's this idea. The only thing in my way are the hordes and hordes of bears. Yeah, what do you do? So I am bullish on dollar, but I'm also bullish on pound. And dollar doesn't have to be strong today, but of course, what we know. Oh man, I'm sick. Sorry, I didn't think it'd be this bad. What we know is the Fed is talking up the rate hike. They have been for a while, right? So, okay, dollar strong, that's fine. And I think it was Asia too, though. The USD yen. That's right. Okay, sorry. Yeah, that's right. USD yen was coming down. So what does that mean currency-wise? Well, either the dollar is weak or the yen is strong or both. So if the USD yen is going down, what direction could the pound dollar be going? What would you assume? Sorry. Holy smokes, eh? Look, we can continue with the webinar. I just can't speak. I can dance. Oh, wait. Whoa, that was bad, white boy. Yep. So, shut through the dark, you're so lame. So, too bad, huh? So what are we going to do now? Maybe. I don't know. So if dollar's strong, yen is definitely stronger. So the other thing I could have been suckered into, and I looked at this USDN, and it probably was what kept me out, but the beast, right? Yeah, you're right. Hey, Nick. Nick, were you around in those days? Yeah. Yeah, I think my first 3 presentations at FX Street were typed. So I could have got suckered into this, and you can, right? I guess I should go into a 15-minute. I could have got suckered into this, and it could have been even worse, right? How'd you like? How do you enjoy being on the wrong side of the pound yen? Right? Yeah, it's so funny. Yeah, I guess I'm at that age where people can be half my age. I used to be the youngest guy in the room. In my early days, I used to threaten all the people that I worked for, all my management and stuff. I threatened them because I was this young guy coming out of nowhere, just relentless. And I had to actually work 3 or 4 or 5 or 10 times harder just to prove myself because all my old people, all my gray hairs were scared of me. Now I'm the old man in the room, huh? Oy vey. Where does it all go, huh? So so anyways, just on the wrong side of this. So it's going to take a little bit for me to regroup. So let's go back to like the pivot setup here. So go away from the USD yen. What are we going to do and try to catch some of these things? So of course I'm wrong. On days when you're wrong, you think that maybe the market is also wrong. It can't just be me. So my spidey senses are telling me we basically just stay sideways for a few days at least, right? But if you're going to try to re-catch some of this stuff, then your job is to pick your lines and maybe look for this, right? So if this is the top of our week, and you can see it was the right in here, Tokyo open, and then London open right after it. It was more pre-London than Tokyo. If that's the top of the week, because we're talking swing trades here, if that's the top of the week, what's our target? No, weekly S2. Shug says WS1, no, WS2. So if that's your plan, Stan, okay, and really, I'm saying this because this is our top. Typically, M3 is our top, and if M3 is the top, M1 is the target. But you need to make a decision, and you can get yourself in a situation where you're wrong for a while, so you don't want to lose a lot of money. Okay, so you don't want to risk a lot of money. But if you think we're going down that way, or let's say down the rest of the week, simply because we started London bearish, okay, so you're like, okay, well, if this is going to trend down, then it's my job to trade in that direction, right? So now what you should do is pick all your lines in which you want to sell and just kind of be like a one-hit wonder. You can say, well, because of this starting out our week, then I am going to sell high, okay, until price makes a higher high. Because you can get yourself caught where you sell here, and gosh darn it, suddenly you're up here. Okay, now if you've made a higher high, now you got to quit, right? So I would say maybe sell at a 382, maybe have a plan B at sell a 618, and then not do anything else ever again, kind of thing. Like if the 618 doesn't work, forget about it. Just hold it for a while, keep your stop above, and if you're wrong, you're wrong. So be it. Because you didn't set the, you didn't do this, and you could say, look, it's not my fault if the market lied to me, it lied to me. Okay, so you can't control that, but you can control your behavior. Okay, and any bull wouldn't want to do 100% retracement and then go up. Even a bull wouldn't want that, right? Like, think about it this way. How about that? Let's reverse the thought process one more time. How about the bulls that bought here? How do they feel about it now? Is it possible they gave up on it? Well, look, you're a professional, Demuth. You're never scared. But doubtful, maybe. Holy smokes. Totally losing my voice here. Hang on. Holy smokes, eh? Well, it did make a lower low. So I'm just saying there's a reasonable plausibility that you get one of these. And you need to decide whether you're going to play that or not. Okay? So now what can we do? I think maybe we should measure this. Okay? So let's say you're a bear and you've made the decision now that you are going to sell somewhere between the 382 and 618, or maybe the 382 and then again the 618. So maybe you limp in half on 382, half on 618. Either way, the stop's going to be up here about 72.70, right? 72.72. And that's that. And that's called a trade plan, isn't it? Okay. Now, if you're super aggressive, you just trade the 5-minute cycles, but they have to be way overbought, right? It's the first one that we've had. Amazing, actually, if you think about it, huh? Holy smokes, eh? Ricola. Yeah, I'm sorry. I just didn't realize I was this sick. I knew I was sick, but I don't care about these things. But you got to be able to talk, right? All right. So what about euro? Same sort of thing, right? It's like I feel like the market's lying to me, but what can I do? It's not about feel, right? Um, so that looks like a lower low. So future behavior kind of dictates that that this happens. What do you think? Me. And I'm just sort of I'm forced, right? Like I'm obligated, and I kind of wish I wasn't, but I never have a problem selling Euro USD. Never have a problem with that, right? So right off the bat, I want to what's the low here? 1.12000. Where's the upside? It's not even 1250, right? Way up here is 1250. I mean, it's not even a 50 pip move here. Um, but fine, right? You know what this is up here? 4H21. Yeah. Yeah, you could do the hammock. You can consider this a double top. Sure, I'm okay with that. Lower low. And then the next part of your behavior when you spot that is you measure this and you look at a 382 and a 618 and you sell somewhere in there, right? Somewhere in here is your sweet spot. And the thought process is, right? So most likely, let's say it does an 80-20, or in this case a 20-80, you would sell around 20, and your first take profit's going to be around 80. Then it's going to come back to 0, and then it's going to go down to 50. That would be the whole New York session, really. Um, so where are we now? We're at 10, so it's got to go back to 20, down to 80, up to 0, down to 50. So that means there's one more in here that we haven't marked yet, and then down for a new low low. Got it? No, it's the fib after the lower low after the double top, Miles. Does anyone else not know hammock? It's an anchor that I created. So when you say yes, does that mean yes, you don't know? or yes, you know? Yeah, okay. It goes back from a long story. So let me show you. Okay, I talked about one of the secrets of success is practice, in particular drills, right? And so I used the example of, working on a battleship in the Navy and the commander of the ship constantly testing the crew, going through drills where, you could be, you know, you can just be on the ship and all of a sudden, and you got to run and man your battleships, right? Or battle stations, right? So you go to your battle station and you sit there and then it's done. Exercise, right? And then you're going about your business again later the day, and all of a sudden, battle stations. You running through the ship and everything, and you finally get to your battle station, and you're there. It's just a drill. And you're standing in the line for dinner. It's dinner time. You're in the mess hall, whatever you call that in the belly of a ship, right? And you're standing there with your tray of food. Oh, run. You got to run through the halls and up the ladders and get to your battle station, right? Just another test. This is going on day after day after day, week after week, month after month, until it's burned in your brain. And I suppose that's the whole point, right? So you're laying in bed in your hammock and battle stations. You hop out of your bed, hop out of your hammock, right? Throw on your boots, run down the hall, dip your head under the steel door, because it's there, and then up the ladder, get to your battle station, and you basically haven't even opened up your eyes because you're still half asleep, but you've been through the routine 1,000 times. And you know to duck your head just out of routine, right? It's just burned into your brain, into your psyche, into your subconscious, into your id, right? And what you're practicing, what your battle stations are all about, is what do you do when you spot something like this? Okay? Or what do you do when you spot something like this? Okay? And the battle station part is you just, without even needing to think about it. Oops. Let's see if I can sneak that one in there. That you just automatically, you can fib this and you're ready to buy or sell it. And what you're looking at is the double top or the double bottom. But more importantly, after the lower low or after the higher high. Okay, and when you see that combination here, right? The higher high has to be there. You just automatically respond exactly the same way every time, right? And that's the hammock. That's the anchor, in the mental anchor. When you see the double bottom with a higher high or double top with a lower low, the routine, fib it, and respond. Okay. So, if you're trading it on a daily, maybe you want to look at it that way. Okay. So if you're a bull, you're going to want to do that. At some point, it'll pull back. If you're a bear, you might be doing this one. Just a different time frame, right? And you're fibbing it the other way, which is also correct. That's the point you're going to have to get used to at some point, right? That you're gonna want to do this. Okay, and remember, both have a high potential of happening. And what you can do is put them together, and you can see how a bull would buy, drive it up to the bull's 618. Sorry, I think it was 1382 or something. And it's there, and it's the bearish entry, and they're going to want to take it down. And both could happen today, right? And if you're not sure how to play both, then don't play both. If you're a bull on this, play it like a bull. And by the way, you would have been a bull on this last week and maybe last month. So it's not like you're looking at this saying, Wayne, should I be bullish? No, you've already made that decision, either with fundamentals or you looked at a daily. Okay. And if you're there, well, now you're waiting to sell high because you have a bearish trade plan. You want to sell that 618. Okay, or you want to do the 2080, right? Like the pound. Would you play both? I don't like doing that, Miles, but you know, if you're scalping, why not, right? You know, if this USD yen comes down further, it could go down a lot further. So let's go back to this. Okay. What I'm looking at here is daily. Okay. This says double bottom. So this puts us around 105, 106. But if this is fundamentally driven, then it could go down even farther. It's pretty amazing, isn't it? This is 104. Wow. You guys ready for it to go all the way back down to 104? Wow. Williams just spoke somewhere. Where is he out of? San Francisco? He has Janet Yellen's old spot. He just said he expects 2 or 3 rate hikes in 2016 and about 3 or 4 in 2017. Wow. Damn. So what's he saying? He's saying June, SEP, and DEES? Holy smokes, the dollar would get strong on that, huh? Oh, you're going to do an inverted head and shoulder? Okay. Yeah, yeah, that's fine. You know, to me, it depends on when we get there. If we get there in the next 3 weeks, no, I think it can make a lower low. If it takes 3 months, well, then maybe, right? But I think I think we could go down to the lower end of this and move sideways for quite some time. you know, like drop to 105, 104, and then move sideways all summer. Yep. Oy vey. Okay, so this looks like a monster start, though, doesn't it? So the reason I said 104, you might have picked that up. I don't know if I'm being clear or not. I just spaced out there for a second. Wow, I must be a lot sicker than I thought. MR1 and 104-ish is MS1, monthly support 1. So that's what I got going on there. Now, weekly M3 predicts weekly M1. Might as well call that a central. So down, up, and then down. Yeah, so yeah, I think it could. It's very interesting, especially when you got like, I know Williams is not a voter, but you know, when you have the Fed spreading stuff like that, he just said it. 805, what is it, 814? He expects 2 to 3 rate hikes this year. Well, we know that's not priced in. And then 3 or 4 next year? That's not priced in either. That means dollar strength. But he's a non-voter, so who knows. But clearly they're out there talking. I think he was also, wasn't he on TV on Friday or Saturday or something, saying the same kind of stuff? Yeah, and that's the interesting part, right? Is that Yellen isn't on board. Well, here's Williams right now on TV at the Council of Foreign Relations. Yeah. Bullard says for a rate hike, strong jobs, actual inflation, waning global weakness, against a rate hike, weak GDP growth, low inflation. Okay. So, anyways, that's why I guess it's nice to have a couple of TV things going on. The other interesting thing, I guess you wouldn't know this, but I don't have the sound on these, these TV stations. So I just watch the headlines and stuff like that. So that could be a long way down, but what does that mean? Dollar weakness or just unbelievable amount of yen strength? Well, CAD yen doesn't look bullish to me. Right? Here's CAD yen on the hourly. Wow. That's just beautiful, huh? You are not alone. Breakout, pullback. It's beautiful. I think your target's going to have to be weekly S2. It's 82.5. We're at 83, so it's only about 60 pips left now. Hard to call. I mean, obviously it's trending down. There's no doubt about that. But typically, what I'm looking for on the open of the week is, playing of some key pivots. And it looks like, someone's playing Friday's high as this week's high. And that's not an easy thing in reality to trade, is what I'm telling myself. That's why I'm not in it. It's not your fault, Wade. It's not your fault. Beast also. I mean, it's just like, I guess we got to get in on this and stay with it. When you're looking at Beast on the daily, it's a lower high. Let's put this to a daily. And it didn't even make it to resistance. So, I mean, is it still going to do it? Or is this daily done? I mean, I don't know. I kind of want it to go up before it comes down, right? What do you think? I'd like one more up before down, but then I look at the smaller time frames and it's crashing. That yen, I mean, is strong, man. Oh, you're trading it like a triangle? That's too complicated for me. But, what I'd like is, to come up here before it drops. I mean, I don't mind it dropping. Is that really damn, I feel like I just got it wrong this week, man. I want it higher before lower, and it looks like it's falling, but it's too late for me to sell it, and I don't know if I want to buy it. Maybe I'm just sick, huh? Yeah, yeah. So Guy's like, maybe it's just a Monday retracement. Yeah, maybe. That's why I might have to regroup maybe after New York and see what New York does. Right? Maybe this is a Tuesday Asia trade for me. Who knows? Inverse head and shoulders on daily. What? Let's see. Yeah, 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 yeah. You could say that. And then I think we actually did. We already planned that out, right? Yeah, we already have that planned out. This is the neckline expansion, right? So for that, really, what we need is this type of price action, you know? So do I want to buy in here is the big question. And yeah, see, I mean, I don't know. I had no problem buying this dip here. But this one, yeah, maybe, yeah, yeah. I just feel like I'm off today. Maybe it is because I'm sick or something, which is fine. So I got to be cautious. But I'd feel a lot better doing something like this, right? Or how about, as we say, this is a 3A2, 50% is a little lower. Here's 158. So let's say it comes down 40 more pips. Okay, so it does this, and then New York decides to double bottom higher high. What do I do? WWWD. Right, I'm going to try to do this. Right? And play that inverse head and shoulders on the higher time frame. So yeah, that would be a hammock. Double bottom. But remember, the most important thing here is the fact that we're in the fib zone, right? So this is the 382 and 50%, and a psych level. So if it double bottoms and then higher highs here, then yes. Not just because it's a double bottom higher high, but because it's double bottom higher high in a zone which I consider support and which I already have a trade plan to buy. Okay, so that your strategy has to be pre-established, because if you're all tactics, it's just a total waste of time, right? So you can't just be all tactics. So it's strategy first, and the strategy is, you think this is an inverse head and shoulders, and if so, this is a little opportunity to buy. The market's oversold, and it should be going up. All right, cool. Right? Well, Miles, if hammock is just an anchor, a mental reminder. So again, the important part is we're at support. You're already a bull. You're already support. The market's oversold on this time frame. Okay, you're at a psych level in your fib zone, and then you see a double bottom higher high. Okay, so the double bottom higher high at support, that's where you yell hammock, and then your response to that is you draw the fib. Okay, really what I'm also eyeballing is this area here. So really anywhere in here is what you're planning. So you spot it when it's made the higher high, and now you need to wait. Right? See what I mean? Okay. So anyways, let's do one more and then call it a day. That definitely, and the USD yen is showing that, where the dollar is actually quite strong and the yen is killing the dollar. So like pound dollar is still falling, and didn't I start with that today? I wanted it to go up in Asia, and it's just not going up. It just ain't going up. And dollar's not weak, man. Dollar is not weak. Uh, let me show you on a 15, right? Right? Look at that. Just beauty. Right? Lower low, lower high. Drop it like it's hot. A request for gold? Yeah, sure. Why not? Let's do gold. Why not? So, in my opinion, right, what is the only reason to buy gold? Because for about the last 3 years, I've said there's no reason to buy gold. What's the only reason to buy gold now? Negative interest rates. No, I couldn't give two hoots about dollar. By the way, the dollar's strong. Okay, yeah, negative interest rates. So the gold was weak because for the last several years, if you were looking for a safe haven, you would just buy bonds. And the carrying charges were a lot less. If you actually hold physical gold, you have to put it in a vault somewhere. It's expensive, right? So anyways, so there was no reason to own gold. It was expensive to own gold. Yeah, I'm gonna sit up a little bit. Maybe that'll give me some energy. Woo. Come on. Oh yeah, there you go. All right, that's a little better. Well, let's see if I can do that more. That must be it. All right. Yeah, so there was no reason to own gold when you could just buy a bond. It wouldn't pay you very much, but it didn't really cost you anything. You made something. There was no carrying cost, right? Now that interest rates are negative and basically it costs you money to hold cash. How about that? Money costs you money. You're guaranteed to lose money. There's another way of looking at it. Your money is guaranteed. No, it's not crashes and stuff, guys. Professionals don't think that way. So you need to change your mindset here. No, it's not because it's the end of the world. No, because a giant crash. No. Cash used to be it would pay you either a little bit of money or it'd pay you no money whatsoever, but you just stayed in cash. Now, in certain places in the world, it costs you money to hold cash. You're guaranteed to lose money. So in that case, you buy gold. And remember, we already identified, I said somewhere between 1,100 and 1,000 would be the floor. Turned out it was exactly right between 1,100 and 1,000. It was 1050. So it was just like, I don't know, just sort of there. Okay. So, where does that leave us now? I don't know. At some point, and it might be a few more months here, but at some point, things will be quite different in the world. For example, the Fed is very likely to raise interest rates. Right? I think everybody would agree with that. And that's going to make U.S. bonds and U.S. treasuries, like corporate bonds, U.S. treasuries, savings accounts, all these different things are going to pay higher interest. And that's going to attract investment, and that's and in particular in foreigners, and the U.S. dollar will get strong. So who knows what gold will do on top of that. As soon as, let's say there are 4 or 5 countries globally now that have negative interest rates. I think when they stop that process, then gold will lose its luster again. Now there's this other idea that as income goes up around the world, there'll just be more money to buy gold as well. So maybe there's support there in the sense that, even if you want to buy gold, if you don't have any money, wow. If you don't have any money, you can't buy any gold, right? So when income goes up for everybody, then demand for everything goes up as well. But I don't think we're quite there yet. The world is still deleveraging. In particular, Europe is still going through bad times, right? So as long as they're charging interest rates for you to be in cash, then gold will just be maybe a cheaper alternative, is all it is, right? S&P 500 can't come down, but the language is what I'm picking on. First of all, a crash? No. And then is gold up because the world is worried about a S&P 500 crash? No, your language is too strong. Okay. Is the S&P 500 likely to come down? Well, it's a cliche to say sell in May and go away. I mean, like what? I mean, okay, yeah, sure. S&P 500 can come down. Is it likely to crash? I don't know about that. All right, your your language is too harsh for me. Okay, I think of it as that a lot of people have jobs in the United States. Income and wages are starting to go up, and every week $50 goes into the 401k, and that's that. And more money is back into management hands, and it's going to get allocated. And are there going to be ebb and flows and ups and downs and stuff like that? Sure. But in the United States, the economy is functioning. Is it overbought? Sure. Did the stock market rally for the last 5 or 6 years because of the Fed's involvement in printing money? Yeah, sure. Okay. Is there going to be adjustments into over the next few years? Yes. But what I would, if you want a long-term view, I think the stock market will go up, between 3 and 6% per year for the next 5 years. But that doesn't say crash. What that says is, okay, 5 years ago, I recommended people buy stock indices like the S&P 500. In fact, if you go all the way back to the exact day, it happened when the S&P 500 was at 8,000. Okay, and when you have the Fed flooding the market with money, then a rising tide is raising all ships. Everything's correlated. It didn't matter what you bought. The stock market's going to double and then double again, right? So, yeah, okay. So now we're at the top. We're at all-time highs. Great. So what's going to happen? Is the market going to crash? No. Our banks are healthier. We got all the dumb money out of the real estate market. I mean, so much better of a situation. We have liquidity. We have a credit market that's functioning. Things are good, man. Now we are at a top, and things maybe are overbought. Maybe it'll hard to continue increasing revenue and profits when Europe is still sucking. But you remember, when Europe gets through its tough times, China is going to get through its tough times, and then the rest of the world is going to get through its tough times. So we need 5 years to fix Europe, right? So what's likely to happen in the next few years? Is the stock market going to crash? No, it'll come down, but it'll also go up. And now you got to get out of your stock index futures and funds and such, and now is when you hire hedge fund managers, because you got to find someone that says, all right, the S&P 500 might go up 5% this year, but if you work with me, I'll make you 20%, because I'll pick better stocks. I'll build a better portfolio. So that's all. Okay. And so now we're just moving into, I'd almost say a more normal kind of market, right? Correlations are going to break down. Stock pickers are going to be more involved. But when you're talking about a professional, they are thinking, excuse me, what are they going to do over the next 6 to 18 months? And then their holding period might be 5 to 10 years. Okay. And this time of year, I'm also thinking that way as well. I'm thinking about what am I going to do in September? Okay. Okay. So I think I'm out of energy. I think you can hear it, and I apologize for that. I really do. You're important to me. These sessions are important to me. Um, I knew I was sick, but I didn't know I was this sick. But I'm going to be here tomorrow, and I'll be here the next day, and the next day, and next day. So, yeah. No, it's just hard to talk. That's all. I didn't. So I got. I don't. Not crying. No sob story. So I just. It's not coming through very well. So might as well. Might as well save some energy for tomorrow. But so what I'm going to be doing for the next 8 hours really is I want to see if we do bottom out in places that I think are supportive. I don't mind buying dollar, so therefore I want to sell euro dollar. Okay, I prefer to buy yen. Or I mean, buy pound, in particular when yen is weak. So my plan might be, and I'm not set in stone here, but my plan over the next 8 hours might be buy pound yen or sell euro dollar. And then if I can get one or the other of those together, then maybe I'll tiptoe into some other correlated positions, right? But one of those things is I was just I love the pound dollar at that psych level weekly central pivot in Asia, and then I wake up and I'm like, son of a biatch, that didn't work. So too bad. So without further ado, peace on earth. May the pips be with you. May our profits be above average. Thank you for your patience with me, and I'll see you tomorrow. Hope to see you there. Take care of yourself. Cheers.